Hello, hope everybody's doing well. On this little talk, well, it's a short, but it's a very important one we're going to talk about in this session. And it's really about a way to analyze a country for possible investment and possible consideration. I'm a big believer in using certain tools that are really effective and that help you analyze situations. And a lot of cases, companies will use certain formats and tools so that they can have a consistent approach to the way they look at certain situations. For example, if a bank is looking at making a credit extension or a loan to a company, they'll have a format for analyzing those types of loans, and that everybody knows exactly what they're looking at, and you can compare apples to apples, or rather than apples to oranges or apples to pears, depending on what country you're from. And the idea is that when you have a consistent format and a way to look at something, it helps everybody involved to make the right kind of decisions and compare accurately over time the different decisions and different opportunities that present themselves. So today we're going to look at a table, and I want you to really look at this because you will use this in your project. I'm going to have you work with this exact table as part of the project you do to analyze a new business in a new country. So please do call up the slide. It's called the Business System Analysis, a couple of slides, and we'll go over that. Okay, so if you please look at that, and let's look just briefly at the categories here. If you look on the second slide there, where it says assessing a business system, there are a lot of different ways or categories that are there to show what kind of country you're dealing with. And these are very, very useful. So let's have a look at them. The first one is on the governance area. So what that means is how is the governing process conducted in a given market, in a given country. And you'll see there that the first one is ownership system. And so you'll look at that over. You'll see how is ownership of companies distributed among the public sector, corporate sector, weight of big business for small business, and how is power distributed. And this is really important. There are a lot of apparently open-looking countries where, in fact, the government has a big involvement in the economy. Other countries like the United States, we feel like the government's all around us, but it's relatively less so compared to other countries. And some countries, maybe like Chile or Brazil, they look like they're fairly open. The government is relatively uninvolved, but in fact, they're heavily involved in a lot of the main sectors of production of the country, and also the influencing of the decisions made around investments and around growth and development of certain industries. So you want to see that, because if you're thinking about moving into a country, you really want to know how things are owned, how's ownership structure. Are there big business, small business? If you're a small business, you fit in. Do you need to have a certain size in order to make an impact, etc. And then you have what is the distribution of shareholders, managers, trading, etc. In the United States, for example, not all companies, most companies are big companies are owned by stockholders who have relatively no say in the way the companies manage, is that they own shares, and the board of directors and the president and other management people really run the companies, but it's not driven by the owners really. They can buy or sell their stock, but they don't have a lot to say otherwise. In other places, and of course in the United States sometimes too, but in many other countries, you'll see huge family groups or special interest groups or conglomerates will own a percentage of the company that allows them to actually make decisions. So the same people own the company, are on the board and in management, and they can make decisions from that way. And that's really important for you to understand about the market you're looking into. Then we'll look at the networking system. And again, this is what is the relative weight of vertical integration, importance of outline. You can read all those there. What that means is that how are things set up? How is the internet connectivity among different groups? For example, in a place like China, you'll see family groups and certain relationship groups will be very, very strong, and you'll see that in a lot of places too, but it'll be relatively more strong in some countries than others, where if you really want to know how it really works, you need to know who's connected to who, how things work, and how the power is passed around and held. A lot of times you'll see countries where they'll have a big network of different types of business that have really seemingly nothing to do with each other, and they really don't have anything to do with each other on an industry side, but they're connected to each other by the family relationships, loose, even maybe unacknowledged legally relationships, but they exist. So you need to really know that, because, and also you might be in a certain country where ethnicity or plays a huge part. There are some countries in Europe, for example, they're one country, but inside that country is very strongly divided among a certain, the past, where ethnicity, language, and culture really define who you'll do business with, who you work with. You may not be able to cross over into, like in Belgium, for example, you have, it's one country, but there are very strong ethnic and language areas, groups where you may not be able to do business with the whole country if you really are in tight with one of those. So that happens a lot. Alumni networks are important. For example, here in Miami, there'll be people that do their entire business based on they went to X high school and they do all their business with alumni from that high school. It's that powerful in this town. So that those are important. Then management system, and there is a decision-making autocratic, participative, or bureaucratic, and how does advancement depend? When I worked in England, it's very structured compared to here, where you have to work your way up, and you can almost tell a person's seniority by how old they are, and they call it you bringing gray heads into, or bald heads in England's case, into a meetings. They say, how many gray heads will you bring? How many? Because it's a how many will they have? How many will you have? Because it's a hierarchical system, and it's much based on age. Whereas in the United States, and of course in Latin America, youth is prized, and sometimes you're just benefited from just being young, even if you don't have the same experience that other people have. And of course it's a spectrum and a range. But it's really important to know that, because if you are intending to work in a certain very structured economy where age and status and that those things make a difference. If your team that goes there is maybe, quote, too young or too aggressive or too something, they won't fit in as well. And you may sometimes, often when I worked, when I was working in England, and I had responsibility for the UK and Europe for financial institutions for the bank I was working with. And if we had a meeting in France, sometimes the real relationship manager would bring me just in order to provide a level of seniority that would match the level of seniority that the company's bringing. So you have to know those things in order to be effective. They're very real, and they're very prevalent. And if you don't understand it, you can wonder why it isn't working. Nepotism is a big thing. Here we frown on that, although it exists. But in other countries, it's expected. It's completely expected that if you're the owner of a bank or owner of a company, that you're going to have levels of management that are actually your family, and it's completely understood and expected. And it can you have to know that it can lead to sometimes they're very good, sometimes they're very bad, but they're going to be there. Then let's look at the social culture. Rationality. How far does society agree that the main mission of business is to create value for shareholders, stakeholders, and society? That's a big question. In some countries, it's very clear. We're here to do business. We're here to create value for the shareholder. The United States would be characterized that way. That what's the point? The point is to make money. And so you say, what? Anybody? And I often ask new people in a company when I'll say, what are we here for? And they'll have all sorts of answers, and rarely will they say, we're here to make money. And that's really the answer. You're in most of the time in a country like the United States, everybody's about how much money can they make for the owners and the shareholders within the guidelines of legality and the regulatory environment, etc. But the point is, why would you be doing this without making money? It may not be the case in other countries. Sometimes a big conglomerate will own a certain type of company because they like it, or maybe they think it might work later, or they want a place to put their family members or something. But it won't be based on how much money they can make, or it won't be based on can they do society well and help things. So you have to know that. Why are people in business in that country, and what's the understanding in terms of what they're looking for and what they mean to do. And also decision making is really key on that one, as we talked before. Then authority. Is a hierarchy, egalitarian democracy the main base for authority? What is the source of power? Obviously in certain countries the religious elements carry the day, and as many Middle Eastern countries, it's obviously we're seeing a lot of violence, a lot of other things based purely on what they believe is their religion or their ethnicity, etc. You have to know that. You have to know that if you're going to try to work in a country like that, how do I deal with that? How will we be perceived? What can we take sides? We refrain from taking sides. In other countries, the religion aspect may be meaningless. It doesn't matter at all. You should always never assume that, because even in almost every country will have a background, and there will be people that from their past have views on things, and you should know that. You should be aware of that. And of course, the other thing can be how society's leveled. You'll find a lot of people really enjoy coming to America from the more developed European countries because they feel, I'm more judged on my merit and how hard I work at what I do than how old I am or who my family is, etc. Of course, in a lot of countries, just your accent in that language will tell people how much you make, where you're from, and all sorts of things that reveal themselves, which is not so common in other countries. So there are a lot of things on education level, the way you speak, all sorts of things that you have to know in order to be effective there. Is a university degree important? Of course, in the United States, everybody goes to college, but in fact they don't, and in other countries it's even less so, and then there are other countries where it's a much higher level that attend university in the United States, and literacy level, all those sorts of things, and the authority thing, I love, and make a big difference. And then the identity, is the country individualistically focused, or is it more collectively focused? Is a group think or individual think? Do you prize the individual? Do you prize the group? They'll obviously certain countries like Japan, you'll see more consensus building, group decision making, time taking. Whereas here we think, we do everything on individual. It's not quite that way either place, but you would tend to say there's more individualistic. More emphasis and more appreciation for individual effort in the States, and less in other countries where they would say you really have to do the consensus and make sure everybody is on board with the decisions. This is really important. When you're negotiating, is the person negotiating able to make a decision? Here, we usually know by the job title and where they are, whether they can or cannot. But in other countries, you might think, well, this person has the role to make that decision, and it isn't being done. And that's because they cannot make that decision without going back to their head office and the board, etc. And you have to know how that works. And also, you have to know how they negotiate in general. Are they negotiating in good faith? Are they negotiating on a basis of protection for family, their group, their clan, etc.? Or is it really a business decision? So these are really important things on how the people identify, who do they identify with, and what's their support, and how they make those kind of decisions is really key. Okay, next page there. I will look at institutional fabric. And there you look at financial capital. How is capital allocated? Is it a planned economy? What are the banks? Who owns the banks? How does the banking system work? What are the financial markets? Is there informality? Are financial markets open, transparent? And is foreign capital welcome? These are all really important questions. If you're thinking about investing somewhere, do they want your money? What do you have to do? Often, if you make an initial investment in a foreign country, you have to be very careful how you register that initial investment. Otherwise, you won't ever be able to take it out, or maybe you won't even be able to repatriate the return on investment if it's not properly registered and documented correctly in the beginning. It's unique to every country, but normally that'll be the case. You have to really be clear on what you've invested in order to allow you to repatriate the earnings and also eventually even your capital if you choose to leave the country. Are the financial markets open and transparent? We're very open in the United States, and some countries are very open as well, and other ones appear open and not, and other ones don't even make any pretense about being open. It's very very obscure, and you don't know, and you have to really have local people that can help you understand the financial markets, because it's very difficult for you as an outsider to make correct decisions and be fairly treated, and you may really lose a lot of money not knowing what's going on. You may miss some major opportunities. You may not know how shares are sold or bought or transferred or traded. Even if the structure looks like you can understand it, it may be completely different. In planned economies, the allocation of capital is much different than in open market economies, of course. So you may think, I can benefit from that, or I have to fight against that, I have to work around that, whatever it is. But if you're in a really, if you want to expand in a planned economy, that's something you have to deal with. The planning bodies, the government, are going to allocate funds to certain industries and sectors that may be in competition with you. It may be you, but you have to understand how it's done so you can benefit from that or protect yourself from the downsides. How the banking system's owned, operated, etc. is really key. Financing often comes from banks. Banks can be heavily regulated, they can be government owned, they can be family owned, they can be kind of unregulated, they can even be in a jurisdiction which on purpose isn't so tight on how the regulations are managed, so that they can attract foreign capital and deposits, and even if it's a little bit unclear where the source of that funds are from. That's of course disappearing and going away, but there's still a lot of jurisdictions that are more favorable than others towards receiving money. Financial markets also can determine what the level of capital markets. For example, in a really highly fluctuating political and economic environment with a lot of uncertainty, it's very difficult to get longer term funds. You can't get a 30-year mortgage in a country where the situation changes so fast that no one has the confidence in being able to get their money back after 30 years. Here we think you can buy 30-year anything in the United States because people have a high degree of confidence that in 30 years from now those structures will be in place. Like life insurance, life insurance, if you buy, one of the key things about life insurance is that you get the money back when you die. That might be 30, 20, 10, 20, 50 years from now. So the infrastructure has to be established that money will be available and the structures will be there to repay you back. So often you'll see in many countries where there is no real life insurance, not that many people do it because they have no confidence that those structures and companies will even be around or be able to pay, or will have invested your money wisely over that time in order to actually follow through on the commitment they've made upon your death. So these are all really important things on how the financial capital works. Human capital. What's the quality of education? Is it practical, theoretical? A lot of countries really focus on practical education. You'll even see an early division of people, like in the high school level, where some go on to more liberal arts or more some sort of college like that, and others become focused more towards the technical skills that can help them get a job. And they'll do that early in their educational careers, where we don't even think like that anymore here in the United States. We think everybody should go to a certain type of college, and then so you're not really prepared to be an electrician, a plumber, a mechanic, etc. Or in other societies, you're highly skilled in those things early on because you've made a deviation in your educational career early on that prepares you for a career. What is that really like in the country you're considering? Are on-the-job training, apprenticeship encouraged? What are trade unions like? Are they organized? How strong are they? The whole thing there is like what you're thinking about. I'm going to have, most likely, if you, depending on the kind of company you want to install in another country, I'm going to have people, and they'll be their people. They're people from there. What are they like? Where have they gone to school? If you're working in Mexico, you can find tons of people that have been educated in the United States, that speak perfect English, and that have really basically understand completely the way the United States works, and they understand how Mexico works. So it's very easy to find management level people at a very high competency level in a country like Mexico, because they share so much. They watch our television. There's so much sameness, even though it's vastly different, but you can find tons of people that you can deal with at any level and understand exactly, have a very open or normal communication based on some commonality of education, etc. No, you got other countries it doesn't occur. But again, with globalization, you've seen a lot more availability of people that have been well trained in quote our system, or they represent a system that is easily matched up with the U.S. way in terms of education level, views on business, etc. So it's less of a problem it used to be. But still, you'll always be looking at who can I hire? Are there enough people there? Are they skilled enough? What's the price? What are the unions like? What are the laws protecting workers, etc. All those sorts of things. Then look at social capital. Is a society based on interpersonal trust, institutionalized trust in law, or hierarchical trust? In the case of interpersonal trust, what's a reference group? So what that's saying is that when you get below the law, when you get below the way things are technically written, what really happens? How are the structures in society there to either protect, harm, help, or be an obstacle or challenge to our business? Sometimes you'll see countries where you might see if that person can't repay the loan, a family member will step in and pay. If that person loses their job, they can move in with family members and be supported economically until they find a job. Other countries are much more individualistic. If that person fails on their obligations or loses their ability to, revenue earning capacity, they're really on their own. These are really important things. And also, how big is that? Is it completely family oriented? Is it network oriented? Is it religious based? Are there school affinities? But how is the social capital there? What's it really like? And what can it do to help hinder, obstruct, challenge, or benefit what you want to do? Can you leverage off that? Is it something you have to deal with? And then finally, the role of the state. That's really important. I think that when you work overseas, you always have to be very acutely aware of how the state, what's the government's role in everything that goes on in this economy. Is the market highly regulated? Is there a central planning authority? Is the government interventions in business or labor conflicts? Now you might say, okay, well, the United States is, but it depends on your interest. I mentioned before, my career has been in banking, and I would say that in the banking, the government is extremely in our face, and the regulatory environment is extreme. And not that it's a bad thing, but it's something you deal with every single day of your life. As if you're a manager of a bank, you're dealing with the regulators and the regulations all the time. And I'm not saying it's a bad thing. It's just that you have to really understand, if you want to do a bank in the United States, you're going to have to deal with an incredibly powerful and strong regulatory environment. That may be different other places, although that's tending to be more similar in the banking industry around the world. But in any case, what you have to think about is the industry that I'm in, and the thing I want to do, and in that country, what is the role of the state in that? If you want to do oil exploration almost in any country, you're going to deal with the government. They may really need what you have because they don't have it, but it's going to be heavily involved because it's a primary resource and something that's important to the economy, important to the national defense, etc. So you may have a great company and do something that they really need. They really want you there, but you're dealing with the government, and that can be the case in mining. Anything that affects the sovereignty of the country or the general population will be heavily interfaced with the government. No government's going to allow you to come in and build dams and mine gold, etc., without their involvement. Other things are less important. Regular consumer production. You have a toy you're making, a toy factory. Government's not going to be all that concerned about something like that as long as it's safe. So anyway, this is really a good table. And like I said, what we're going to do when you do your project, you'll do these two slides, and you'll have for the country that you're going to decide to work with, you will fill out these boxes. And I think it's a great exercise. It's something that's really important, and also something you'll be able to take with you as you move forward in your career. If you choose to go into international business, you'll always be looking at, what's the basis of my decision making for that country, and a table like this can really help you. All right, well, thank you very much. Hope that helped. I hope you understand that, and please let me know if you have any questions. Thanks a lot.